the myth of systematic trading or quantified trading is that there's no emotions. No, there's plenty of emotions. It's just you need to think ahead of time so that you can deal with them when you got the emotions. It's like, oh wait, I'm supposed to do X, Y, Z when this happens. So I don't have to emotionally try and decide what to do.
Welcome to Better System Trader, the show where we talk about all things systematic and algorithmic trading. And today we've got a very special guest, Cesar Alvarez from Alvarez Quant Trading. Welcome, Cesar.
Thank you, Andrew. As always, I'm honored to be here.
Now, it's good to have you on the show yet again. Now, I was doing a little bit of research before our chat today, and you've been on the show. You may actually be the number one guest on the show, actually. I'm not exactly sure the stats, but you've been on the show, according to my research, 5 times. There was episode number 3, so the third guest on the show ever, backtesting trading ideas. Episode 37, we did stop losses, which is really cool. You shared a lot of research into
that was a good
techniques. That was really popular. And then in episodes 127, 130, and 133, we did a mean reversion trading series, parts 1, 2, and 3. Then episode 165 was about market regime techniques. And the final one, episode 195, it was called Low Effort Trading Strategies, which, if I recall, was about rotational trading.
Yes.
So, you've been on the show many times. Thanks for your contribution.
Lots of episodes. Oh, my goodness.
Yeah, that's right. So if anyone wants to go and watch those episodes after this chat with Cesar today, head on over to bettersystemtrader.com. There's a little search bar up the top right and just look for Cesar and you'll find all those episodes. Now, in those episodes, though, we were talking very much about your trading style and very tactical kind of things with your trading, Cesar. Today's going to be a little bit different. We're going to talk about some defining moments and hear some exciting stories about your journey or through your trading journey. So we're going to kind of dig a little bit deeper into how you got where you are and some of the things that you learned along the way, because you've got quite a trading history and trading journey to share. So are you ready to go?
Ready to go. Looking forward to it as always.
Okay. Well, when we were organizing this, I asked you to provide a bit of a list of, some things you could talk about. And there's this one jumped out at me in this list. And I was really intrigued by it. And I'm not really sure exactly what it's about. And it's just called Just Get Out.
Yeah, very simple words, but very hard to execute. It took me years and years to learn this lesson. So as algorithmic traders, as any traders actually probably, there are times where you may get into the wrong symbol. You may type it in wrong. Maybe your code that generates signals had a mistake in it. You got into the wrong symbol. Your broker, for some reason, didn't execute your trade, and you're still in a symbol that you shouldn't be in. There's just lots of various reasons why this happens. And for years and years, I would struggle. It's like, okay, I'm in this trade. I really shouldn't be into it. When should I get out? Maybe I should wait, if it's a mean reversion trade, it's like, maybe I should wait till it bounces. Or, I look at the day trade, it's like, oh, maybe I'll try to split the difference and try to get out. So I just never came up with anything good. And then I had a trading buddy, and one day he calls me up. He goes, oh, I accidentally got into this symbol. I type in this symbol, and I got into this other symbol, and I don't know what to do. He goes, it's down like 30% today. But he goes, if I look at the chart, it's a great mean reversion setup. And we're trading mean reversion at the time. And he goes, oh, I think I'm just going to wait for it. Maybe I'll wait for it to bounce. And then, because he's a doctor, he goes, well, this is I think it was a biotech stock. He goes, well, let me do some research on this stock. And he starts researching. I'm telling him, just get out of the stock. You're not supposed to be in it. He goes, no. And then he looks into the research. He goes, oh, I understand why it's down 30%. Oh, I think that market's overreacted. I'll wait till it bounces. And then a little bit later, he calls me and goes, I've been looking at the Yahoo boards. I'm going, what are you doing looking at the Yahoo boards? We're traders. Just get out of this thing. And, he's just, and then all of a sudden he goes, okay, I'm getting out. And now he's starting to split the difference. He goes, okay, I'm going to see if it's a huge spread right now. I'm going to see if I can day trade my way out of this. It's like, wait, we're not day traders either. Just get out. And I kept telling him this. Yeah. And, of course, since he's trying to day trade it, it's going against him. And eventually he just gets out at the end of the day. And that even though it didn't happen to me, but we are such good trading buddies, to me it was like, oh, this is what I should follow the advice I was giving him. Whenever something happens that I'm not supposed to be in the trade, just put in a market order to get out. If it happens to be, I notice in the evening that I'm in the trade and I'm not supposed to be in it, you know what? Just put in a market order to get out at the open. Or if it's a thinly traded stock, I may put in a TWAP order. But either way, I'm getting out first thing in the morning. I'm just out of it. Or if I notice in the middle of the day that, oh, I'm not supposed to be in this stock for whatever reason, just put it in a market order. Don't try to split the difference to try to, eke out, an extra 5 cents or whatever it's going to be. It just never works out, So for me now, it's whenever I get into a stock I should not be into for whatever reason, because, these things happen. My rule is just get out. That's why it's very simple conceptually, though it is hard to sometimes execute, I will admit. And it took me a long time to learn this lesson, do it, and now be consistent about it. It's probably been about 10 years now, so now I'm pretty consistent. If I'm in something I shouldn't be in, it's like, damn, all right, just push the sell button, get out of the position, and deal with it. Don't become a day trader. Don't go to looking at Yahoo boards. Don't go just get out. It's just as simple as that.
Yeah.
It is, and it's one of those things as a systematic trader, you don't think you're gonna have to deal with these kind of things. But it happens. I don't know how frequently it happens to you, but at least a couple times a year, I'll be in a stock that I shouldn't be in for whatever reason. Normally nowadays, it's because either there was a data change in my data such that now the system says I shouldn't be in the stock when I was in it, or it's because my broker for some reason lost my order. And I'm not, I look at it at the end of the day and it's like, oh wait, why am I still in this position? I'm supposed to sell it, and the broker somehow the order didn't get executed. Or worst case, I forgot to place the order and I'm still in the position. So it's like, oh crap, get out the next day. It's just get out. Don't try to say, oh, how did the stock do? Maybe I can wait till it bounces or whatever it is.
So why do you think it was so difficult for your friend and I guess in generally for a lot of traders just to get out?
We don't know. It's in a situation we don't have a trading plan for. We don't have an idea. It doesn't happen frequently enough that you can kind of say, okay, this is what I'm going to do. Because it doesn't happen that frequently. As a systematic trader, it's not like a weekly occurrence or daily occurrence. It's every couple of months that this happens. And for my friend at that time, it just happened to be, he looked at the chart. I had to agree with him. Yeah, the entry was a perfect mean reversion setup, And yes, whoops. And every now and then mean reversion trades, get killed. But and then he was thinking, okay, I would just wait for the bounce. But it's one of those things. That trade for him just happened to hit lots of different things, and then it happened to be because in the area that he knew about, because he was a doctor, and just seeing him go through it and realizing, wait, I've done similar things before, So that was where it just crystallized for me of, okay, I need to not do this stuff. It never works. It just adds stress to something that's just not going to happen.
So was that, did you say he got into that symbol because of his own mistake, or was that like a broker's mistake?
He typed in the wrong symbol. I think if I remember correctly, he swapped 2 letters because he doesn't, he's what I would call a systematic quant trader. No, not systematic quant trader. Discretionary quant trader. So he looks at, like the signals I give, and then he will use some discretion on which ones to trade, but then usually use systematic rules to get out, kind of thing. So for his entries tend to be a little bit discretionary.
I guess that kind of blurs the line a little bit then, doesn't it? Because he's given himself a little bit of leeway, but perhaps that maybe there was an element of justification.
Yeah,
it's like, it wasn't a mistake, it was good luck.
Yeah, but I give him, but it wasn't the trade he was supposed to be. It wasn't the trade he was supposed to be. At the end of the day, it was just random luck that, it looked like a perfect mean reversion trade, So it was, to be, afterwards we were laughing so hard when when we retold this story. We actually had a trading group that we were part of at that time, and when we got together and he started telling the story, people were in tears, just laughing of just every single mistake that he made along the way. And like I said, it just crystallized to me of, you're just gonna, it's not part of your plan, just get out. It just makes life easy. You don't need to think about it. Yes, it hurts. And thankfully these are not frequent things. And they shouldn't be frequent things at all. If they are, there's something wrong with your trading, what's going on with you placing your orders or whatever.
Yeah. And not that it matters, but did that stock actually bounce or not?
I actually do not remember.
Okay.
I do not believe he made, I think at the end of the day, had he just gotten out, he would actually come out ahead at the end of the day, versus trying to do everything
Right.
else.
Okay.
I don't remember if he actually waited to like a 2-period, to actually, 2-period hours, I get over 70 or whatever, when he made money.
Yeah.
But on that particular, when the day it happened and the day, by the time he finally got out, he would have just been better off just getting out right at the beginning. No stress, no stress, annoying, but no stress. I mean, I completely understand the being in the symbol that you're not supposed to be into. That's
Yeah.
very annoying when it happens.
Yeah.
But yeah, lesson learned. And like I said, even from then, it took me a while to get good at the just get out. I mean, because it is sometimes hard to just like, oh, what am I going to do with this position? But now it's just automatic. It's like, if I'm not in it, just push the button, get out. Life is better. Life is better. Keep going on. It's a trading error. They happen. The faster you get rid of them, the better.
Yeah, we actually had this situation happen last week. So I've got a trading team, and we've got a broker who executes our trades, and we had some strategies that we should have switched off. One of them was in a trade, and we're like, oh, what do we do with the trade? And I was like, just get out. We're not supposed to be in the thing. It doesn't matter if it's winning or losing, right? It's just, you just got to be, especially as an algorithmic trader, it's like, these are the rules, and you just get out. And there's all kinds of ways to justify it to yourself. Oh, maybe we should hang on to it to the end, or it looks like it's going to go up, or whatever. But at the end of the day, you shouldn't be there.
I mean, especially like you said, that's a example that's happened to me recently, in the sense of, okay, it was part of a strategy. You shouldn't be in it now, but the strategy was good, so maybe I should just wait for the exit. Like you said, you justify. Oh, it is a real trade, in some respects, and I'll just wait till it's like, no, you're not. Overall, you're not supposed to be in it. Just get out. And like I said, we can find great reasons to justify staying in it or trying different exits or whatnot, but it's really not helpful. And it's just, to me now, it's just get out. It just makes life so much better.
Yeah. So you made a comment about how you've trained yourself over the years to have that kind of attitude where now it's just instinctive. How do you, like, for traders who might be struggling with these kind of things or might be in this situation right now, how do you train yourself to do that? Because it's easy just to say, I'll just get out.
But, it is
when
easy.
you're in it, you've got all these emotions and your thoughts are clouded. And so how do you...
The way, I mean, like I said, it took me a couple years to really get good at just getting out. And for me, a lot of it was just reminding myself, okay, in a sense, putting it into my trading plan. What's, in my trading plan, if I'm in a position, what am I supposed to do? We're all supposed to have like some trading plans, either written down or at least in our heads, of certain, what to do in certain situations. And for me now, it's, it was like in my trading plan, it was just get out of this position. And, at first it was like, oh, God, let me look at it. For a while, I remember I probably was doing, okay, if I was supposed to get out, it's like, maybe I'll just TWAP over the day, whatever. And then it was like, you know what, just it's a lot easier, just put the market order in, put the market order, especially, I mean, the biggest thing I think, the hardest thing I had was, especially on stocks with wide spreads, it's just so hard to put a market order in. You just want to split the spread. And then I realized, wait a second, I'm becoming a day trader. And that was actually the hardest part for me to stop doing, was don't try to split the spread. Just put the market order, get the shitty price, but you're out of the position. You know what? That's the cost of doing business. And all I can say is we're not day traders. So, especially that was the hardest one for me. It's just like, I'm not a day trader, and trust me, I am horrible placing manual trades. Oh my God, I can spend hours telling you about all the stupid mistakes I've done doing manual trades. So I've quickly learned, just push the market order, exit, get me out. Okay, done. So it takes time. It's hard, like you said. It's easy to say, like I said, when you saw it's just 3 words, just get out. It takes time, and don't expect this lesson to, it's like, oh, okay, I understand what he said. No, next time I'll just get out. Well, yeah, it's easy. Sometimes it'll be easy. Sometimes you're going to want to become the day trader or look for some reason to hold the stock longer. But just, have it written down somewhere. Just get out. Bad trade, just get out. And eventually, hopefully, it will sink in.
Yeah. Well, I think it applies to day traders as well, right? If you're in a trade, that you're not supposed to be in, then whether you're a day trader or not,
my bet is they're more likely to justify the splitting the difference and trying to day trade their ways out of it. Because hey, I'm a day trader, so I know how to eke out the extra thing. Maybe it will work for them, but it never works for me. So
Yeah.
because I'm not a day trader.
Okay. All right. Well, that's defining moment number one or lesson. That's a good story, actually. Just get out. Easy to say. I guess the other challenge with that is hopefully those kind of trades don't happen very often, right? So you don't get a lot of practice.
Yeah, that's the thing. You don't get, and that's the other reason why you should just get out. You shouldn't happen very often. Like I said,
Yeah.
it happens maybe once a quarter for me, and normally it's either because my broker lost a trade, lost an order, or I forgot to place a trade. Those are the two most common reasons that even though my trading is mostly automated, I'm still in it, and every now and then I'll have a brain fart and forget to place my trades, and all of a sudden it's like, oops, I'm in positions I shouldn't be in anymore. So like I said, at most it happens once a quarter, I'd say, and yeah, because we don't have practice on it, that's another reason to just get out.
Yeah. Well, actually, you just made a good point there. What about if you're supposed to be in a trade and you're not? Would you just get in?
Yeah, so that's an interesting one. The answer to that is it depends. So the way I trade is every quarter I reevaluate my strategies. So I have a basket of strategies, and I reevaluate that basket and trade the top 5 of those strategies. And sometimes that means a new strategy comes on board. Okay, and that new strategy will have open positions off it. So my decision depends on the typical holding period of the strategy. So if it's let's say a mean reversion strategy that typically holds 3 to 7 days, I won't even bother getting it because I figured, okay, in 7 days it's going to be back. I'm going to be out. Those positions will be out. I'll go into them. But I have other strategies that are momentum strategies that can have holds of weeks or months. So for those, I just get in, and I just get in. It's like it tells me, oh, I'm supposed to be in this position. So Monday morning, market open, I put a market order, and I'm just in. Though sometimes for my private trading group, people will often start up and they say, oh, there's an open position here. What should I do? This is kind of similar to what you say. And I tell them, look, for the short, I give them the same advice. For the short ones, short hold ones, just wait till you get new signals and get into those. For the ones with longer holder periods, and I tell this to them mostly because it's easier for others to do. I tell them you have two ways of doing it. You can just get in, but a lot of people find that difficult. I said, or you can, let's say, get into half a position this week and another half position a week later, because we're always afraid if we get in, oh, it's going to drop, or that's always a fear if we just get in, or especially if it's been going down. And there's like, oh my God, or if it's gone up a lot, it's like, oh my God, it's about to drop. And I tell them, okay, just get in half today, and a week later get in a half, and you've kind of averaged out, and you're fine, but you're in fairly quickly at least. But now for me, it's like, no, I just get in. So that's kind of the reverse of that. Is if I'm not in a position that I should be in, I'll get in. Now the last part of that, which I still struggle with, is, and it's kind of the same, is orders that. So sometimes in my back tests, so a stock will often, in my limit systems, the stock will come down, hit the exact limit price, and bounce up. But sometimes because there's not enough shares, I either will get partial fill or no fill.
Mm.
And the question then becomes, what do I do now? And I have not fully resolved what to do, because in theory, I should just get in the next day and just say, oh, well, I missed it. But what happens often to the ones that just touch is they often then have a really big bounce. So they're usually up 4 or 5%, and that means they're a day away from exiting or 2 at top. So I'm still struggling with the opposite of that part of just get in, of what to do on that side.
I suppose in those kind of situations, you really need to look at what exactly is your edge. And if your edge is buying it so far from the mean, and you only got a partial fill, and then you're close to the mean, then your edge is no longer there, right? So
Right.
I guess
And
you could
that's
make
part of my justification of not getting in. But in theory, there should still be a little bit of an edge there. So
yeah.
I'm torn. Yeah, I'm kind of torn on that one. So what I currently do normally is I just put the limit order back in and hope it kind of dips back down. But I know I still struggle whether that's the right thing to do in this particular case. Like I said, that's more for my the kind of limit systems that I have that are either both on the long side and the short side.
Yeah.
But anything that's supposed to be in on the open, I just get in because the longer
Yep.
hold period, it's easier to deal with that because I know that if it's a longer hold period, that means the edge is much bigger. It's not a 2 or 3% edge. It's usually a 10, 15% edge kind of thing.
Yeah. Yeah. So I think the valuable thing in what you just said there, other than, it depends, but what it sounds like you've got is you've already decided how you're going to, handle most situations, right? Other than that last one we spoke about. So you've decided beforehand. It's not emotional if and when it happens, right? Rather than, okay, it's happened. What do I do now?
Right. I would say it's less emotional. I mean, that's always the myth of systematic trading or quantified trading is that there's no emotions. No, there's plenty of emotions. You need to think ahead of time so that you can deal with them when you got the emotions. It's like, oh wait, I'm supposed to do X, Y, Z when this happens. So I don't have to emotionally try to decide what to do.
Yeah. Yeah. All right. Well, that was defining moment number one. Just get out and maybe just get in, depending on the
Yeah,
situation.
maybe just get in
No,
too.
yeah. I like that. So thanks for sharing that those insights, Cesar. Now we're on to defining moment number two, which you titled "Stop Following the Market." What does this mean? What do you mean by stop following the market?
Yeah. So as a trader, I've been doing this systematically for, oh my God, 20 coming on 21 years now. So I've been doing this a long time. But let's say the first half of my trading years, I'd always have the, my, I don't know, whatever, Yahoo Finance or whatever up in one window so I can see how the markets are doing today. Are they up high? Are they down low? Sometimes I'd have my position window open even just to see how my positions are doing. And of course, that comes with stress because all of a sudden you can see, it's like, oh my God, my account's down, I don't know, 2%, 3%, whatever it's down today. Or, oh my goodness, this stock is up a lot. Maybe I should sell it early. And it was just, as traders, we think we need to follow the market intraday. Okay. Eventually, I realized, wait a second, why am I following the market intraday? I'm not supposed to do anything. All my orders are already set. If it hits my limit, I'm going to be in the position. If it hits my profit target intraday, I'm going to get out of the position where I got in or out at the open. What am I doing? What use is following the market during the day other than me kind of potentially wanting to jump in, to become non-systematic, to jump in and say, oh, I should get out of this position, or oh, I should do something. And on a rare occasion, I was doing that, but I was pretty good most of the time not doing anything, just leaving it be. But it was just the stress level of following the market. It was just like, why am I doing this? And
Yeah.
and yes, it's great when the market, your account's up huge today. It's like, oh yes, I'm making lots of money. Those grades are great, but it doesn't. Again, okay, yeah, so it's up great, but I'm not changing what I'm doing. So eventually, I just slowly like, okay, I don't need to follow it through. It's like, okay, let me just close the tab down, and I don't need to follow it. And I found out that, well, my trading stayed basically the same, but my stress level throughout the day was like, I don't know. And the funny part about this now is my trading buddy would every now and then call me up and go, have you seen the market today? I'm like, no. Should I be happy or should I be sad? He goes, and he'll tell me, and then it's like, okay, let me bring up let me bring up Yahoo Finance, let me bring up my account. And, but again, at that point, now it's become more of a running joke with us because it's like, he'll kind of say, okay, I know you haven't seen the market, but look at the market today because you're going to, you should look and see what it's doing. It's like, okay, I'll look, but I'm not going to do anything. So, yes, if you have to follow the market in the middle of the day because of what your trading strategies do, great, follow. But as somebody who uses daily bars as his trading strategy, as somebody who puts in market on open orders or TWAP orders in the mornings or puts in limit orders, just those kind of things, there's nothing for me to do in the for the market. Now, every now and then, I will not necessarily look at the market, but I will kind of double check to make sure all my orders got placed correctly. Because, like I said, every now and then my broker seems to lose orders, which is quite annoying. So when I really want to make sure they're not getting I'll just log in first thing in the morning. It's like, okay, all my orders there, yep, okay, or the orders I expect to execute, yep, fine. Try not to look at how my account's doing, kind of thing. Now, do I look at the end of the day? Do I look to see how my account did? Yes. At the end of the day, I figured out all my, my current positions, the closing prices. I'll take a quick look at how my account did for the day. But the whole following the gyrations in the middle of the day, especially on Fed days, oh my God, those are the worst days to look at the market. You want to watch your blood. I should put a blood pressure cuff on those days. See how high it goes up. See my account move. But again, am I supposed to do anything? All my past back testing had all the Fed market days, and it didn't tell me to get in or out or do something on those days. So
Yeah.
it's just, I guess it became more zen in a sense. It's like, don't need to follow the market. It doesn't matter what's, going on. Even if worst case happened, let's say, I don't know, a major event happens that the markets go down a lot. Am I going to be trading? Because whatever that event, it's going to be huge and emotional, whatever it is. And is it good? Am I going to make good trading decisions when some huge thing happens? Not likely. Even if another 9/11 happened, but happened during happened during market hours, I don't think I'm doing anything. It's like, you know what? I just need, am I going to also close every position? Maybe, but I'm not sure what event would cause me to close every position. That's not good. Yeah, I don't know. So I find no huge benefit, to following the markets every day for myself. And like I said, it just made my stress level go down so much. It's like, okay, whatever happens, it doesn't matter. I find out at the end of the day. And even following my account day to day, I realize now I'm following even that less and less. It's like, okay, whatever happened. And it's like, okay, how am I doing for the week? How am I doing for the month? How am I doing for the year kind of thing? Because there's just lots of gyrations on the day to day stuff.
Yeah.
So yeah, that's just, and again, if you need to follow the market during the day, great. If your strategies say, because you're a systematic day trader, or because of how your signals are generated, you've got to follow the market at the day or at the close, perfectly fine. But for me, there is no reason to be following the market in the middle of the day. So it's like, just ignore it, be calm, go zen.
As you were talking about that, Cesar, I remembered my very first trade, or it was my first big, largely profitable trade. And I was checking my account like literally every couple of minutes and watching the gyrations during the day. And I was so excited when it was going up, and then it'd drop, and my heart would like, oh my God. And just thinking back at those moments, there was a couple of lessons that I needed to learn there. I remember that it was really tempting just to close the trade and take a big, I think it was up, I don't know, 8 or 10% or something. I was trading quite leveraged. And I think looking back at that moment, I didn't have confidence in my strategy, which is why I kept looking. And the emotion of winning and losing was the excitement of trading, and too much leverage. And I think if I had all those three things sorted out, I probably wouldn't have bothered looking. So I like the way that you're explaining.
Yeah, I mean, a lot of people like to look because they get the thrill of seeing things go up and down, and that actually to me is a bad sign. Trading should be boring, in my opinion. I mean, systematic trading should be boring. If you're trying to get excitement out of that, that's just not good, because you're going to override your systematic signals. Like you said, you see it go up way a lot. It's like, oh, I should take the profit, and it's probably not. In the long term, it's probably not. It's going to hurt you, because if that actually was the right thing, you could back test that and saying, okay, if it's up 10% intraday, should I get out? You could back test that, and I bet you that anything would say, nope, that actually makes the results worse, or whatever that thing is. So yes, long term, whatever you're doing is probably going to hurt you. So that's the other thing, is watching during the day just tempts people to do things.
What about if you want to watch during the day just to see how the market reacts, to get different ideas to test in your trading? Would that be?
I mean, the thing is, anything. It all depends on your trading. I guess your trading style. So for me, since I use daily bars, all the information I have is in the daily bars. I don't use intraday. It doesn't even matter. Even if I was trading intraday, since I'm systematic, I can get 5-minute bars, and I can use that to try to look for things. So I don't know how getting trading ideas from looking at the live market. Unless you're going to be using, when the Fed makes announcements or whatever, I still don't see that. I'd rather just look at charts, lots of charts, and kind of look at that and see if I see something that I'm looking for, than following the markets intraday. Because again, I think it also really tempts one to jump in and do discretionary trading when things are up high, especially when they're up high, like you said. People are afraid to see their profits disappear, and and that's when you kind of like, oh, it's up a lot. I got to take some off, or I got to take it all off because I don't want to lose my profits. Well, I got, as I always tell myself, well, is my strategy say to get out? No, okay, just leave it alone. And I'm not tempted if I don't look in the middle of the day.
Yeah. Now I know you just touched on this a little bit earlier, but can you just repeat how often do you, for your trading style, end of day trader, I guess you could call it, how often do you actually check your account?
I check it every evening. I'm not sure exactly. So every evening when I'm, I see what trades happen, what trades I need to place, I check my account. I guess I know my account size. I don't necessarily look exactly, was I up 2%, down 2% today? Most evenings I'll take a quick look, whether I was, how much was I up or down, but not all. It's the amount my account was up or down is actually, I have it all calculated in an Excel spreadsheet, is actually off to the side. So I actually have to scroll to it to look at it. It's not in a prominent location.
Oh, okay.
So it's actually, I've actually put it somewhere. And the only time I'll sometimes look at it is if the markets were like up high or down, because how the market did is actually in a somewhat prominent location. So if I see the market's up, 2%, it's like, oh, I wonder how I did today. Or the market's down 3%. It's like, oh, I wonder what happened today. I might scroll over and look at. If I see the market was, between -1 and 1, I'll usually not even go look. So it's not even that. Like I said, I more look now at the, how am I doing for the week? How am I doing for the month? How am I doing for the year, kind of thing. So that's where, I guess I'm slowly working my way up in the time frames of how often I look at, what I look at.
Yeah, that's a good tip actually. I know someone who did that. They set up their trading platform so that all the P&Ls for the trades were off the screen, so they could only see what trades they are in and the entry and the stop price. And because they really struggled when they could see the profit and loss of each trade, really brought back emotions for them. So that's a good way to do it.
Yeah, that's another really good thing. Yes.
Yeah.
I mean, the P&L for my individual trades aren't off the screen, but for some reason I don't look at them.
Okay.
I don't. I've become a boring trader. It's just like push the button, push the button, push the button, push the button. Okay.
That comes with practice, right? And with time.
Yes, that comes with years and years of practice. I've probably mentioned this in I've had to mention this in one of my previous ones. I used to have a Post-it on my monitor that said, "Just push the button." Basically, because that just I'm not just push the button. Don't do anything else. Just push the buttons, push the trades to go in. And thankfully that Post-it's long gone because I have now fully internalized that. But for the longest time, it was just push the button.
Yeah. All right. Well, that's defining moment number 2. Stop following the market, or stop watching the market during the day if you don't have to. Don't give yourself the stress if you don't need to.
Yes.
Which I think is a really good idea. So trading can be stressful at times. Don't make it worse, right?
Yes.
If you don't have to. Yeah. All right. So that was defining moment number 2. And number 3, I'm really interested in hearing the stories behind this one. It's called dealing with short disasters of 100% plus losses. Shorting is an interesting topic. So, yeah.
On the opposite end of the extreme is shorting. Shorting is always stressful. Definitely not something I recommend, for beginners or even, for people to do anywhere near early in their trading career. So shorting is interesting. As we all know, you can lose more than 100% on a shorting trade because it can all of a sudden gap up a huge amount, and doesn't matter where your stop loss was, it can go way up. So a little background. I have found shorting to be still an area where there's at least a decent edge in. On the long side, through the years, I've seen the edges get smaller and smaller and smaller. They've gotten smaller on shorting, but not as fast as on the long side. And I think mostly because shorting is difficult to do just emotionally. And there's also lots of logistical problems of, finding the stocks to short, making sure, just all the other issues that go with shorting. So I've been shorting a long time now, a while. But one of the problems with shorting, like I said, is I've had multiple times, I'll say probably only 3 times or so, where stock will gap up 100%, or maybe not even 100%, 50% is even horrible, trust me. And what I came to realize, I learned a couple things from this. It's like, okay, I need to know how to deal with these situations. They're not frequent, but how do you deal with these situations? And then one thing, especially these tend to be mean reversion trades. So as we all know, as I've talked about in previous one of your previous podcast or times I've been on your show, was stops hurt mean reversion trades. It's just if you put a stop in, even if you put a ridiculous high level stop, a 50% stop, 75% stop loss, it reduces the returns. Now, so a couple of things that I started learning with shorting is like, okay, I need to put some sort of stop loss. So it's like, okay, I started putting a 50% stop loss of, okay, if there's a 50% or more loss, get out. This is back to the just get out thing. So it's like, okay, just get out of it, deal with it. And that worked well for a couple of years. And then one morning, or not in the morning, but one evening, when I kind of downloaded all my trades and looked to see what happened, all of a sudden, I noticed it's like, oh my God, my shorting account really got hit hard. What happened? And when I looked, it was like, oh, this stock was up 110%, and it was a biotech stock. So the problem with biotech stocks is, well, the good and the bad biotech stocks is they can go up a lot or they can go down a lot. And I've done testing to see whether it's better to take them in or out. And overall, it's better to keep them in as long as you can deal with these 100% losses that happen every now and then. So I had one of these, and I froze. And it's like, oh my God, what am I? It's like I can't get out now. It's like this is up. This is back to justifying the thing. It's got to 100%. This has got to go down tomorrow. And of course it doesn't. It goes up. Okay, so but what I realized was my position sizing was too big. And I realized it's like, wait a second, 100% can happen. I need to reduce my position sizing small enough such that a 100% jump in a stock does not freeze me, does not make my brain go, oh my God, like you said, even though the rule is, I was saying earlier, just get out, there's a point where your brain freezes. And, my position sizing for a shorting system, I found out, was just too big because my brain froze. It was like I panicked. It's like, oh my God, what am I gonna? I can't get out. It's just my position size has gotten too big. It's like, oh my God. So from that, I learned, okay, my shorting strategies need to have smaller position sizes because if they're smaller, and it's because I went through the mental exercise, okay, and I'm just making numbers up. Let's pretend my position size is $10,000. And I pretend, okay, if this position now suddenly doubled on me, and it doubled, so now I've got a $10,000 loss. Am I going to panic? If the answer is yes, okay, maybe I need to have an $8,000 initial position size. Okay, if it goes up 8,000, am I going to panic? Maybe. Okay, maybe 7,000. If I goes 14, okay, that I can deal with. So that's kind of the mental thing I went through, was just kind of dropping my position size down little by little and kind of imagining, can I handle that kind of loss on this one position? And can I just not freeze? And that's how I thought about it, got around to it, and said, okay, this is where my position sizing needs to be for me to work out. And like I said, shorting is not for everybody because these happen. I mean, you short long enough, maybe it's not 100%, but trust me, 50% still sucks. I've had plenty of the 50% ones, and they're not fun to deal with. So it's one of those things that took me a little time to deal with and understand what it was that was causing me to how to fix that issue. Thankfully, I have not had 100% loser the last couple of years, so I haven't had to deal with that particular problem. But I know, as a person who shorts, it's always a possibility. And it doesn't necessarily have to be a biotech stock because it's also happened with a takeover announcement. You get a takeover announcement, and they're paying a huge premium, and it's like, oh shit. So yeah, that's the lesson there for me.
Yeah. Have you been able to identify any characteristics about stocks that are potentially going to gap up like that?
The biggest characteristic is they're a biotech stock or pharmaceutical.
Okay.
But like I said, I've tested removing those stocks, and the results get worse.
Oh, okay.
So it's one of those. If you can learn to deal with the pain, your results are better. So on my signal service, I actually have a short strategy, and I have two versions: one with biotechs and one without biotechs, or kind of things. For those of the people who don't want to deal with, reduce the possibility of having to deal with one of these 50% to 100% losses, because it's 90% of the time it's a biotech or a pharmaceutical company that jumps up.
Yeah.
But like I said, they're also the same ones that can be down 50% in a day. I've had those where all of a sudden, like, you look at it, it's like, oh, look at that, down 50% in a day, woohoo! So you get both. So it's a matter of can you learning how to figure out how to deal with the pain, and that's what the way I dealt with it was by shrinking my position sizing down.
Yeah, that's a good tip. I remember when I was I only trade futures now, but when I was trading stocks many years ago, I had some short strategies, and this was in the Australian stock market, and I seemed to have problems with things like no stock available in the shorting pool, and then of course when the shit hits the fan and governments or regulations say no shorting, and they bring in all these rules.
Oh yes, I hated that.
So I found that even though you can create a pretty decent looking back test for shorting strategy, when it comes to executing it, especially in the times you need it, right? You want to
Yes.
short things, and it's like, no, you can't do that. I found a real big disparity between the two. How do you manage that?
Yeah, that is one of the hardest parts about shorting versus on the long side is your back tests. There are other external factors that may come into the issue. Biggest, well, one of the biggest ones, but the biggest one you can't even control is the government saying no more shorts kind of thing, which is ridiculous in my opinion on that, because that actually helps the markets in my opinion.
Yeah.
But the other one, the common one, is not stock not available to short. My two ways I deal with that is the first way is being with a broker that's good at finding stocks to short. I found Interactive Brokers is really good overall at finding stocks to short. It's not that uncommon for my strategy, or not common for them to tell me they can't find stock to short. Um, that tends so that issue you kind of mitigate by your broker, but it still happens. And I I've looked at so one thing I do very closely is kind of like how did my strategy itself do versus the back test. So over the last 6 months, I'll say my shorting strategy was up 10%. Oh, but the back test was up, let's say 12%. Okay, usually that's because they're not. I also have to make sure. Okay, was it because of trading mistakes on my side, or was it because I missed trades? And I keep track of other missed trades, and it's like, oh, okay. Because sometimes those missed trades I've discovered were actually really bad shorts, and maybe it was a good thing I didn't get into them. So you got to keep track of them to see. And overall, I found they kind of wash out, but sometimes it
Yeah.
seems to be, you know, it's just something I track. It's like, okay, because if I start seeing, oh, I made 10%, but the back test made 15%, and it's like, then I'd be really concerned. There was that big of discrepancy. So that's the way I kind of keep an eye on it to see if it's working, or not if it's working. If my lack of being able to find the stocks to short is causing problems on the on my results compared to the back test. So that's how I deal with it. And I said, oh, the other major thing is don't go too illiquid. Don't go too illiquid stocks. I mean, because usually the more illiquid you get the stock, even though they tend to have bigger edges, the harder they tend to be to find shares to short. So that's the other main thing is I've noticed is there's like kind of like a little slider. It's like, oh, I've gone too illiquid. Nope, need to move it up. And that's and part of that is you can't find that out until you start trading and you start looking. It's like, oh, I'm getting a lot of can't find. It's like, oh yeah, because the more the thinly traded stocks versus the higher higher liquidity stocks. But I also understand, because I also like to push that edge, because the lower liquidity stocks also tend to have the higher edges, I've discovered. So it's kind of like, okay, you really want to push that edge, but if you get too close, then you don't get the fills, and then that impacts your overall results.
Yeah. That's right. All right. Well, thank you very much for sharing that, Cesar. I think that's the end of defining moment number 3, dealing with shorting disasters of 100% losses. Defining moment number 1 was just get out if you're in a position you shouldn't be in. Just get out, have the discipline to do that. Stop following the market or stop watching the market during the day was defining moment number 2. Only if you don't have to watch the market, of course.
Yep.
Day traders, they're allowed to watch. And then defining moment number 3, dealing with shorting disasters of 100% losses. So 3 very insightful lessons and stories from your trading career so far. Thank you very much, Cesar. So if people want to learn more from you or get in touch with you, how do they do that?
Yeah, if you go to my Alvarez Quant Trading site, there's a contact. There's a little contact there, or you can send email to me at Cesar@alvarezquanttrading.com. I answer all emails, usually within a day or so. I love hearing from traders, so no question. I love answering lots of questions. I love all the questions I get. They're always interesting things to hear. But yeah, that's the best way of getting in contact with me. And yes.
Okay, and you've also got a signal service and private trading group. Do you want to just quickly mention that?
Yeah, so I've got a signal service. So there are, I think, 6 strategies there right now. These are strategies that I trade myself. They're black box, so I just give the signals to users at the end of the day. They're both. There's a short strategy, mostly long strategies. The reason they're black box, I always get people to say, "Hey, I don't like to trade black box strategies," which I completely understand. But I trade these strategies myself. I do not want the rules to get out. Edges disappear quickly when rules get out. So since I'm trading them, I'm trying to keep the edges as long as possible. So that is the reason why they're black boxed. And one of our strategies was up 50% last year. It's actually a volatility trading strategy. Had an amazing year last year. It trades SVXC and VIXI. So for those of you that like volatility ETFs, it's been doing really well for us. And there's also a private trading group. So you can sign up. We have forums where you can ask questions about things and you get access to all the signals, the educational parts too. So that's more for somebody who's trying to learn more, get more into more things like that.
Yep. All right. Well, thank you for sharing that, Cesar. So if anyone who, hopefully everyone enjoyed my discussion with Cesar today and everything that he shared with us, please give us a thumbs up on the video and hit like and make sure you subscribe to the channel so that you get any new content that is released in the future. We've got lots of stuff planned for this year, so make sure you do that. Okay, well, that's it. Cesar, thank you very much for your time today.
Thank you, Andrew.
Do you have any final words to wrap up?
No, I just want to say thank you, Andrew. I'm honored to be here. I didn't realize I've been here so often, but I always love talking to you and your traders. I just love talking about the markets. Even though I don't watch the markets during the day, I can talk all day about the markets.
Well, thanks for coming on so many times as well. I know you've got a lot of knowledge to share with everyone, so we appreciate everything that you're doing to forward the trading community in general. So thank you.
Thank you.
And thanks everyone for joining us for this show. And we'll see you at the next one. Ciao.